Fuel took a little bit of a dip, but then with Ida, it came rifling back. And week on week, we just saw a 4 cent rise, which doesn't sound like it's all that much, but it is. It's very, very significant, and that's 100% tied to Hurricane Ida. So, we're closer to where we were in 2019 fuel, but we're still running significantly high right now.
Now that's with refineries kind of opening up and like OPEC trying to get stuff moving again, right?
Well, when Hurricane Ida hit, all the offshore drilling rigs were knocked offline, obviously. Now, if you look at when Katrina hit 16 years ago, at the same point in time, post-hurricane, about half of those rigs were back up and running. Right now, only 20% of them are back up and running. Now, it's a bigger market too. So back in Katrina time, we were producing about 1.5 million barrels per day, and now we're producing about 1.8. Right, so it's just a bigger market. There's just more of them, and really the issue is not damage to the rigs; it's the inland damage. So you've got the refineries that are not able to open back up. So the rigs can't flip the switch and get pumping because there's nowhere for the oil to go.
Right.
Right. So they have to wait until it's just a dance. Right. So they have to wait till everybody inland comes back online. They come back online. There's a little bit, oil, as we've said before, is a bit of an emotional market. So people now, there's a perception that there's going to be this huge shortage. So we saw the price go up week on week, and it's gone up 2 weeks in a row. I fully expect it to go up another 3-4 cents next week because not everybody's going to be back online. Now, there has been a little bit of a reforecasting down due to the Delta variant on what consumption is going to look like. So we may start to see a break in fuel prices as the year goes on.
I was going to say, so time to start grabbing your plastic bags and filling up the fuel, or no?
Not yet. Not yet.
Okay,
I mean,
cool.
we could very well see a break, but I expect another 1 or 2 weeks of increased fuel prices.
It's interesting. Like I assume when you say like, oh, the drills are offline, you're like, well, it's just power it up. Like it's not that hard to turn it back on. Yeah. But like you're saying, it's more the downstream effect. It's kind of like everything that Hurricane Ida kind of did was it's downstream. It's not really about like the specific drill out in the ocean that doesn't really sustain so much damage. It's more where it's going. It just can't do that. Let's talk a little bit about PMI. I think the Purchasing Managers Index, really nothing's changing with it. It's kind of, we're seeing what we're seeing, right?
Yeah, it's been 14 months of positive growth. So anything above that 50 line indicates an expansionary economy. We're still there, and there's still some restrictions, just all related to COVID. Again, not being able to get the workers back in, not being able to get the inputs in to produce the final product. So it's one of those things, like if there were no restrictions, would be even more positive, which again contributes to that. This problem isn't going away anytime soon. Right. We even see in the auto sector, all the major auto manufacturers are shutting down plants because they can't get their inputs. So when auto rebounds, that's going to contribute to the transportation markets as well.